Our next video will be on TDS and TCS, that is tax deducted at source and tax collected at source. So what is the difference between TDS and TCS? TDS credit is on our expense, whereas TCS credit is on our income. For example, TDS, whenever there is an expense of say interest income or rental income, the other person who is at the paying end will actually deduct tax before paying us the amount of rent. So this deduction will appear as a credit in our statement, annual statement, which is 26AS, form 26AS. This can be taken as a credit against our income tax liability computed while filing the returns at the year end. And TCS credit can be considered when there is a credit available against our income. A scrap income, say when you are into manufacturing process and you have manufacturing scrap, so while selling or while receiving an amount against it, the other person will pay you along with the actual amount receivable. So this is TCS. So TDS is a deduction to the payment, whereas TCS is an addition to the receipt. So here we are trying to bifurcate the TDS sections by their rate charged. That is, first we'll see TDS at 1%. There are three sections in the Act which deals with tax to be deducted at 1% of the total amount. So first is 194C, payment to contractors and subcontractors, only where the payee is, that is at the receiver end, your contractor or subcontractor is an individual or HUF, 1% of tax is applicable. And the threshold for this is 30,000 in a single invoice or single payment as such, and rupees 1 lakh during the year. So what is the time of deduction and remittance? It is earlier of credit or payment. So whenever there is an advance payment, even before the invoice is raised or even before the actual expense is incurred, we'll have to first deduct TDS at our first advance payment itself. Then 194DA. 194DA is on payment of life insurance policies. Payment in respect of life insurance policy. Only when 1010D is not satisfied. Say payment should be above rupees 1 lakh, and if the payment is on or before 31/3/2012, then it is 20% of the annual premium should not exceeds the sum assured, and if it's after 1/4/2012, it should be 10% of the sum assured. Here the threshold, as I told before, is 1 lakh. So previously, this might be an important point to be noted, that even before this, it was before this date it was 1%. However, after 1/9/2019, this is a change in the last financial year. That is, it is 5%. Next is 194IA. When there is a payment on transfer of certain immovable property other than agricultural land. So whenever there is a transfer of property above rupees 50 lakhs, then 194IA will be applicable. However, a specific exclusion from this is that acquisition, compulsory acquisition of a property, because that is dealt with in a totally different section. Having done with three sections in TDS at 1%, there are four sections to be dealt with in TDS at 2%. However, there is a common section between these two, that is 194C. So TDS at 1% has 194C because 1% is deductible where the payee is an individual or a HUF. That is, where your contractor or subcontractor is an individual or HUF, then it is 1%. Any other case, when your contractor is a company, firm, or any other form of assessee other than individual or HUF, TDS at 2% should be deducted. The next section is 194I, rent for plant, machinery, or equipment. 2% is applicable when the renting is regarding plant, machinery, or equipment. Say a rent is regarding a land or a building, that will be covered under TDS at 10%. Next section is 194J. In case of payee engaged in the business of operation of call center. So when the service provider is a is into the business of call center, then for under section 194J, only 2% will be applicable. In all other cases of professional service, 10% is applicable. So there are totally 3 sections in this category, that is at 2%, which is also getting covered under other sections. So 194C gets covered for 1% also in certain scenario, I and J under 10% scenario. 194N, since this is a new section, you might be tested and it is given in detail in your RTP. So whenever there is a cash withdrawal for the assessee during the year above 1 crore, then TDS should be deducted at 2%. Since this came into effect from August, even if the assessee has already surpassed the threshold of 1 crore within August, from the very first withdrawal, the bank and financial institution should start deducting TDS at 2% from every withdrawal by the assessee. So, a work includes advertising, carriage of goods or passengers by any mode of transport other than by railways. However, we'll see certain exceptions to this also. Catering will get included, broadcasting and telecasting, including production of programs for such broadcasting or telecasting. Same, there are few exceptions to this case also. There is always a dilemma between 194J and 194 in this case, which we will discuss in coming case. And the final category is where the manufacturing or supplying a product according to the requirement or specification of a customer. So whenever a product has been manufactured as per the conditions prescribed by or the specifications prescribed by the customer, then it gets categorized as work. Then 194C shall be applicable. The next is goods carriage. There are certain exemptions to deducting tax for goods carriage cases. So, if your goods carriage agency owns only 10 or less goods carriages at any time during the previous year, or is engaged in the business of buying, hiring, or leasing goods carriages, third condition is that he should declare or furnish his PAN to you. Only on such declaration, no tax needs to be deducted. So if the goods carriage person does not satisfy these 3 conditions, you have to deduct tax under 194C. So there are conditions or there are 2 different rates as said before for 194C. So if it is individual or HUF, then 1%. Other than individual or HUF, it's 2%. Contractor in transport business, only if the PAN is furnished, then it is nil. The next category would be TDS at 5%. So 194D, insurance commission for soliciting. It's just plain reading of English. Just remember the threshold and the rate of taxes, because there is no room for interpretation in these cases. So 194D is a plain reading where insurance commission for soliciting or procuring insurance business for a sum exceeding rupees 15,000, you'll have to deduct tax at 5%. Next is commission remuneration or price on lottery tickets. So it can be any name, whatever is the name, but whatever is received as a commission against the price on lottery tickets, then you'll have to deduct tax at 5% for any sum exceeding 15,000. So it is easy to remember. There are 3 sections in TDS at 5%, where if the amount exceeds 15,000, we'll have to deduct taxes. So 194D, which is for insurance commission, G, which is for commission on lottery tickets, and H, which is in general commission or brokerage. So D, G, and H, all the 3 talks about commission, but various types of commission. Same has a limit of 15,000 and same has a rate of tax of 5%. Next is 194IB, payment by certain individuals or HUF. In general, if you see the applicability of TDS provisions, that is say H or any other provisions, only if tax audit is applicable, that is your turnover is more than 1 crore or In case of profession, your gross receipts is more than 50 lakhs, these sections shall be applicable. However, in case of 194 IP, we'll have to deduct tax even if there is no tax audit applicable. So if you are, say, a company has a manager who which is providing stay for its manager, and the payment of its rent is more than 50,000 per month for his rental property, then we'll have to deduct TDS at that payment also at 5% per month. The only exclusion or the exclusive condition for this section is that TAN is not required. So for all the TDS cases, TAN is required. However, for section 194 IP, TAN is not required. Say if TAN is not available, then TDS should be deducted at 20%. That is a general rule in TDS. Whenever the service provider does not give you, that is the payee does not provide you with his PAN, then you are liable to deduct TDS at 20% rather than all the applicable sections. Next is 194M, individual or HUF for a contract work by way of fees of professional services or commission or brokerage, some exceeding 50 lakhs. So as an individual for whom no tax audit is applicable, if you are going to hire a contractor, say for a construction of a residential property that exceeds 50 lakhs, then you are liable to deduct tax at 194M at 5%. So as mentioned before, a person who is into production or broadcasting, that is a television people, have different provisions applicable. So first we'll have to bifurcate or differentiate between a payment for production of content or a program as per the specifications of a broadcaster, and a payment for acquisition of broadcasting or telecasting right of the content already produced by the production house. So when a television channel specifically asks the broadcaster for a certain content or program, or the second shall be which is already produced, as such available, we are just going to acquire the rights of it. So 194C will be applicable in which two of these cases? As told before, for the cases which has been produced specifically to the consumer's interest, gets covered under the definition works. So 194C will affect only in case of specification is being produced by the television. So in this mentioned scenario, TDS will be applicable under section 194C since it has been made to the interest or to the specification of their client. Next is TDS at 1%. So pardon me if there are like too many details in this one single page. So first is 193, interest on securities, 10% is applicable. Plain reading, there are almost 10 exceptions to this general rule of interest on securities. Just give it a quick run through in case if it gets it's on your 1 mark or something. The second case is 194A, interest other than interest on securities. So first single exception is that any interest other than interest on securities will be subject to tax under 194A. What is yet another exemption? Interest to partners' capital. So if it's a firm and interest on capital is being paid to the partners, even in that case, 194A should not be applied. Third is 194E. Then there are 3 slabs for 194A. 5,000, which is in general, and 40,000 for term deposits. Third is 50,000 in case of senior citizen. Because if you see for senior citizen, a quick revision of 80TTB, where that is 80TTA is applicable for general all citizens, resident individuals having an interest income of 10,000 or more, then that section shall be applicable. Say if it is a senior citizen, if the assessee is a senior citizen, then 80TTB shall be applicable. That includes savings interest and fixed deposit interest. So when there is no tax applicable on a particular income, you cannot subject TDS on it. So since for senior citizens, the amount of ETTTP is available till 50,000. Exemption, the threshold under 194A is also 50,000 for senior citizens. Next is 194EE, payment in respect of deposits under National Savings Scheme. Amount is only 2,500, that is threshold. Any amount above 2,500 will be subject to TDS. Next is 194J, fee for professional or technical service, some exceeding rupees 30,000. So say this also includes royalty and non-competent fee. So what is non-competent fee? There are certain payments which we do for other person to carry out a business, whereas a non-competent fee is exactly opposite to that. That is when we pay to a particular person for not carrying on a business. Say a senior personnel from the company is going to retire or he's going to get out of the office, so he is like a well-known person who knows inside out of the business, so we pay him, we accept, the company as such accepts to pay the personnel an amount of say a lakh or 2 lakh, either in monthly payments or a lump sum payment, that he should not start the same line of business for say next 1 or 2 years. Then that is called non-competent fee. So even that is included for 194J. Next is 194I, rental payments other than plant, machinery and equipment. Again, quick recap for rental payment covered under 2% when rental payment is for plant, machinery and equipment. Say to a single person, you have both. You have taken a factory under rent, so which includes building, that is the factory rent, and also machineries, heavy machineries inside that. Should you apply this 2,40,000 on each payment or on plant wise separately and building separately? No, that is not how it works. 2,40,000 should be calculated for rent assets. So even if it is plant and machinery and the building has two separate contracts or two separate payments, the threshold should be checked as a whole. That is, if we are paying to a single person above 2,40,000 in the nature of rent for any asset, then it will be subject to TDS. Next is 194 LA, which is compensation on acquisition of certain immobile property. So this is where when we were talking about the other section at 5%. Sorry, 1%, where we were talking about payment on transfer of certain immobile property other than agricultural land. So wherever there is a compulsory acquisition, that gets covered under 194 LA, and the limit here is much lower than what was there. It is only 2.5 lakhs. So seeing the important sections in specific, first is 194A. As told before, there are specific exclusion of interest on capital paid to the partner. Next is capital gain accounts scheme. So we are aware of this from our capital gain chapter, where a person is not able to use the amount of capital gains as specified under section 54 for his exemptions, then he can deposit such amount as stipulated, the time stipulated in the act. Say a person deposits such amounts and he is deceased now, that the depositor is deceased, in whose hand should be the interest paid, the TDS should be, under what ban should it be deducted? It should be deducted till the date of decease. It should be deducted in the hands of the depositor itself, and for the later period it should be in the hands of the legal heir. So in the below example, now we are aware that there are three thresholds itself for 194A. 5,000 in general, then for term deposits it is for 40,000, and for senior citizens it is 50,000. So in the given question, it's actually a recurring deposit. In what category does a recurring deposit fall under? It is actually term deposit. So recurring deposit is actually a term deposit. Subsequently, if the interest paid is more than 40,000 in a year, then that payment is subject to tax at source. Next is 194I rent. First one is applicability on premium paid for acquisition of a long-term lease. So say there is a long-term lease, there are going to be payment on monthly basis. Apart from that, there is an upfront fee paid. So for this upfront premium paid, is there going to be a TDS deducted, or is there a TDS applicability? No, unless this amount is going to be set off against the rental payment of each month, TDS is not applicable on the upfront fee. Second specific exclusion is that if there is a GST component in the rent paid, then that can be